Yes, friends, I am back with another weekly edition of Stock Market Mutterings after a 2-week hiatus. You need me now more than ever on Friday's close. You need me. No, you really don't. But I'm going to talk a little bit about that, try to give you a few ideas to help you make a little bit of money, try to make some sense of this market and give you a few levels that we can look at as we approach the very first week in June. So officially this is Market Mutterings for June 3rd of 2019. As always, if you guys need help with your trading, I'm going to post a link on the screen for those of you that want one-on-one attention. Click on that. It'll take you directly to our live trade room. Also, I'll post a link. I've been talking about this new room that we've had for Stock Twits. For those of you that can't commit full-time to a live trading room, why don't you check that out? It gives you a good base of education, great trade ideas, and you don't have to be attached to your computer. So let's talk about this here. I've got the SPY chart up. And I think one of the important things that we're looking at Friday here, so we'll kind of reverse just in case some of you don't know the full story. Market was clinging on to its 200-day moving average, which was sitting just roughly, we'll say around 277 and some change. You can see it indicated here by this blue line on the chart. And for me, that's always kind of been the good versus evil, good and the bad, bullish versus bearish. And it was kind of hanging on to that. And it was bouncing off of that for a couple of days. We saw on Wednesday and Thursday, but you really didn't feel like it got that trampoline style bounce where it just kind of ricocheted right off of it and took off going vert like it had in the past. But what happens is there on Thursday evening, you get the old tweet about the 5% tariffs in Mexico, and that just kind of really hit a sour spot with this market. You see it started after hours there on Thursday, and it sold off, and you had one little spike there intraday on Friday, but before it was all said and done, I think everybody wanted to hit the eject button, and they got out here on the weekend. Now, here's what I think. I think at this point it was very important, or at least it felt important, and you can always be wrong, but us as technical analysis traders and traders, we just try to formulate some ideas and try to work within it. And I think it would have been important, or if you're trying to make the bull case for a sustainable bounce, I think this market needed to close above that 277 level, which was the 200-day moving average. The fact that it closed down on the lows isn't really a good sign. And what's even more interesting is when this month started out, it started out at all-time highs, and then you end up buried all the way underneath of the 200-day moving average before the month is over. Now, I've got a couple of scribbles written here on the chart just for my information, and 280 I think is what I had here listed as 5%. I might not be able to see this perfectly. And I think it's 265 on the SPY would be 10% correction from all-time highs. Just some notes there I wanted to put on a chart while the day was open and I didn't have to do the math myself. So let's talk about where we may go. Let's look at maybe a possibility for an upswing, maybe a couple of day rally starting at the beginning of the week. The very first thing you would have to do at this point is reclaim that 200-day moving average. To me, that's going to be the pivotal number going forward, is that 277 area. You're going to have to get up there. You're going to have to push through that level, close above that, and then maybe you can start looking at some other moving averages as guides, such as the 10 moving average, which is like 281, and then if it really gets frisky, 284, 285. So I would work with each one of those steps on here. What you're seeing on my chart is the 10 moving average, the 20 moving average by the green line, and the red is the 50 moving average. And I'm just using these as guide points. That's all. So anyway, I would look for those if you get a bounce as resistance zones. But first and foremost, you're going to have to do something about this 200-day moving average. The longer it stays under, the worse this could possibly get. Because if you go back into time and see if I can actually move this chart back a little bit for everyone. When you started seeing those closes back here under the 200-day moving average, that's when things started to really get aggressive. You had a couple of moments here back if we go back to October where it kind of slid below there, made a bounce above it, come back underneath of it, but a couple of times that once it got underneath there, you really saw that heavily aggressive selling in December. Not saying that's what you're going to see necessarily here, but that's all important. Now let's say we start going down earlier. Maybe you wake up to a gap down on Monday morning, or there's a couple of different scenarios there. I would look here. You've got a little bit of support right here at 272.31. Let me put an alert down there for everyone. That's going to be your lows from the 8th of March. So I would look for a little bit of support Under there, you've got a small piece of support on February 8th, which is like 268. And of course, I mentioned that 265 would be a 10% correction. So what am I saying is if you gap down and you don't get a good bounce off of 272s and market can't find some support there, we may see that 265. I mean, it's really hard to tell. So the way I look at it is I think we're going to try to make a bounce back to this 200-day moving average, especially after a whole week worth of selling, but who knows? We're going to find out. So to make the bull case, to make this easy for everyone, you got to reclaim the 200-day moving average of 277. If that can hold itself, then maybe you see 282 to 285 on a strong week. If it doesn't do that, you stay under it, then I would probably think you're going to see down towards 270, maybe even 265 if things get ugly. So let's talk about a couple of different stocks. I don't even know where I wrote these things down at. Let me get my booklet out. There are some still pretty good setups. Strangely, there's a lot of long setups still in this market that I think were kind of hindered by this behavior. One I want to take a look at here is Take-Two Interactive, TTWO. It's not too bad of a look, especially if you can get a little bit of love with the market. I think this would aid this type of a trade here a little bit. And you can see it's just kind of been fighting with its 200-day moving average as well. But for the last couple of weeks here, last couple of weeks of trading, you've gotten a nice bounce from their earnings. Stock is just kind of picking up a little bit of momentum. It just needs a good clear of 109. I think you get a solid push through 109. Then take a look at that one and possibly something that can start filling in some of this void. You got to move at least a void up to 120 that possibly could be filled. But just keep an eye on it. Again, this thing's held up really well considering what the market has gone through, being such a rough week for stocks getting sold off, a lot of them. This one here has held its own pretty good. So this TTWO. Same can be said with VEEV. You know, there's always some good stocks out there if you take a look at it independent of the market. Now this one might be a little bit tough, but this is a play that still has been working pretty good in the market, and that's the earnings gap play that's able to sustain most of its earnings gap over a couple of days. So you had back-to-back pretty strong days from this thing. You're going to need a confirmation or a solid move above this 150, 650 to really kind of get things going a little bit. And again, I think you're going to have to, probably get a little bit of help from the market, but that would be setting up for a nice little flag there on the daily chart. Now, maybe that's something that doesn't happen on Monday. Maybe it's something that happens on Tuesday, Wednesday, or something like that. But keep watch on that. Also, another one here that's kind of bucking the trend is this PAYC. I mean, this is a seriously tight chart. And the market's gone through all kind of different phases over the last couple of months. And I mean, just look at this thing. It's just been walking up this 20-day moving average with virtually any sell on this thing gets picked up immediately. And you can see another stock that closed right up here. I wish the market was still open and this thing would break through that. I mean, that's a really good looking setup on an intraday level. And it looks like you're going to trade back to this 215 and then possibly start moving up a little bit more on that one. So that's pretty good. Now, I want to go back and talk about some of the more popular names that we trade a lot. The NVIDIAs, the Teslas, the Facebooks, and a few of those others. The first is NVIDIA. I tell you what, this thing, the world hates NVIDIA, except for the people that are long. And they hate it too. They really hate it right now too. I mean, what a reversal of fortunes for this thing. I mean, it just goes down and down. I think it feels like it's gone down every single day the entire month of May. I mean, just what a disaster. It's starting to approach, though, Christmas Eve lows, but down around the 125 mark. I mean, you're only $10 out. And the way this thing is moving, it could be there on Tuesday or Wednesday. I don't have any forecast, or I don't want to try to I don't want to reverse stuff that looks like this on the daily. That's not the kind of reversal trade I'm looking. This is just a fire sale in this thing right here. However, there are some good moves intraday to be had with some trades. And I think this thing is it's been a pretty good short on bounces. It's not as aggressive as it used to be. Not like it once was, where you could really get $7, $10 moves on certain candles with this thing. It's definitely tamed down. But it is predictable. Every single bounce has been getting sold. So if you're just sitting there looking at bounces on a chart, picking some support spots, you get up there in the area, you get rejection, you short it, let it do its thing and let it roll over. Now, at some point, this thing is going to bounce. I know there's a lot of you out there that are wondering, hey, when is that going to be? Because this thing just is way, way oversold. And yes, it is. but oversold can also get a lot more oversold. What you're going to need on this is an actual close that's respectable. Like, it's going to have to go up a few bucks and stick. I mean, you can't just sit here. Every single time this thing has rallied, it's just been beat to hell and back. And that's what you're going to need, that tempo change. You've had a couple of opportunities here where every day it looks like it starts out in the morning with trying to rip, but then it just gets sold off, and then it's just toast. Same thing can be said for Tesla. Now, I have a different viewpoint on this one. I think this stock is going to see somewhere down towards the 150s before the year's over. And it's the same thing. Anytime you get an opportunity to get some sort of a bounce, I mean, take a look at this upper chart. You've got a couple of days here for reference. You had this really vert open, a really strong open there on Thursday. It ends up selling off, makes for a great short there. Another rally that doesn't stick, ends up trading back lower, makes for another great short entry. And then the same thing happens on Friday, starts out with authority, like a lot of these do sometimes, and fizzles out before the day is over. So, you know, between this and NVDA, you could put Baidu on that list too. They're just stocks that need to be shorted on any type of a bounce. And when I say a bounce, look for a couple rhythmic candles that get in a row, a little stretch like this or something. Look at it making it up somewhere towards a support line. So you have this resistance. So you had this little rejection here at 190. You find some spots on the chart where you can, control your risk. Just make a reference point right there. And it gets up close to that, start going in with a short. If it's going to do, I don't think these stocks are just going to explode up and just never pull back. But they're going to take some time to kind of to work through some of this shake, because it's obvious if you got jitters over top of this whole market. Now, we're definitely going to get a bounce at some point, just like everybody was sitting there saying it was doom and gloom. Everything was all over in December. The market made a bounce and it went back to all-time highs. So you can't rule out a bounce. It will happen when it's time. So start looking for things that may be burying themselves down deep into support. See if some of these things are approaching levels where they opened up at the beginning of the year, and start putting yourself a list. There's a lot of them there. Like Apple's been sold off pretty heavily. You had a pretty heavy sell there on Facebook on Friday. Netflix is still hanging at support. So there's a lot of great opportunities there. You just need to, get yourself together there and make it happen. So anyway, I'm going to leave it there for today. It's been a privilege. It's been a privilege chatting with you guys again. I'm back. Well, I've never went anywhere. I just didn't do any stock market mutterings for 2 weeks. But anyway, trading's been good. If you guys need help, visit thelincolnlist.com. If you need help with this market, just reach out to me, support at thelincolnlist.com. Pay attention, very close attention Monday on how those levels react, especially that 200-day moving average on the SPY. Until next week, trade well, take care. Talk to you then.